Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, with another update from the floor this morning. It is what about 8:42 a.m. from the trading floors? We talked to you about a trade agreement with China. Now, again, what we have learned to do with China, and this is the cycle that continues to go on now, is we'll see accusations fly back and forth, tensions kind of rise between the two countries. We get an high level talks, whether that be our trade negotiators or directly between President Xi and President Trump, and some type of an agreement to come out of it. The differences between the two countries are probably more vast today than they were even a month or two ago, as the two have very vast, significant differences in the core values and the directions they're heading. But each time that they have met, they have focused on relationship and communication of respect in those meetings, and they have found areas to agree to. Each time they have looked for areas, there are segments of their differences that they could work on and find some type of agreement. And the markets like that. And that's why we're seeing the S&P 500 now within a stone's throw of record high prices, as we just keep incrementally working our way higher as Wall Street becomes accustomed to this trade war cycle. Now we're about a little over 2/3 of the way through the 90-day pause on reciprocal tariffs for all the other countries, excluding China. But we do have another agreement with China. And so, what does this one include? This one includes rolling back the tariffs, kind of an extension of what was agreed to on May the 11th. And so, U.S. tariffs are going to be at 55%, while Chinese tariffs are 10%. Now, I'm assuming that 10% is on top of a lot of the other tariffs that China already charges. We do know from what President Trump posted and what we've been able to gather elsewhere that the 55% charges that we have includes Trump's 10% baseline reciprocal tariff, the 20% tariff that he still has in place over fentanyl trafficking that he's trying to bring to a halt, and the 25% tariff reflecting pre-existing tariffs. So it comes to the total 55% tariffs of what we're charging on goods going over there. That's still not good for U.S. ag commodities. The commodities, the energies and the ags, did get a little bit of a bump this morning from this announcement. There's agreement because talking is happening, and talking is always better than not talking. I do think that there's still a possibility that we eventually could see, and I think it'll take quite some time to get this if we do, an agreement whereby China would say, we'll buy U.S. ag commodities and a considerable amount of them in exchange for more favorable tariff treatment, access to the vast U.S. consumer market. And that 55% tariff level in there still gives that negotiating opportunity for that to happen. But I still believe we're quite some time away from that. And Chinese state media has been preparing its people for prolonged negotiations. I still think that is the case. But overall, we are incrementally moving forward. That's what the market's responding to. Now, we got some other key information this morning that also gave a big rise to the markets, and that was consumer price index data for the month of May. And what we saw was the U.S. CPI rose just 0.1% month on month in May, and the core CPI that excludes the more volatile food and energy also just rising 0.1%. Both of them ratcheting down. Now, as we look at the year on year, we see the headline CPI rose 2.4% year on year. That's up from 2.3% the previous month, but the analysts were expecting a 2.5% year-on-year increase because of the tariff factor affecting both the monthly and yearly, and that didn't happen. When we look at the core CPI, it rose 2.8% year on year. That matches the previous month's pace, but it's below analysts' expectations of 2.9%. So the bottom line is we're not seeing the big tariff increase in inflation that was anticipated and that consumers feared. They expected that back in April that in 1 year we would have inflation above 7%. This does not preclude inflation from the tariffs starting to show up in the hard data in the months ahead, but it's not doing so yet. Why is that important? Markets like that. That means it increases the odds in the market's mind that we could get more rate cuts from the Fed later this year. That's good for the economy. That and when the markets rise on that optimism, people's 401ks go up. It's called the wealth effect, and that helps the consumer feel better about things. And consumers are voters. And when consumers feel good, voters tend to feel good as well. And therefore, you get the congressional support for Trump to continue to use this tariff war to use as leverage to get concessions from our trading partners. So this is a big win for President Trump in this morning's CPI numbers, and we'll continue forward. Like I said, we have less than a month left in the 90-day rollback of those reciprocal tariffs. July 9th is the target date right now at the end of that 90-day period, and I anticipate we'll start seeing more trade agreements come out July 7th, 8th, and even on the 9th. That's what Trump needs to see happen. Otherwise, we could go back to a period of real volatility in the markets, something we're going to have to pay attention to. One final factor on the biofuels program, we still do not have the RVO or the blending mandate requirements from the EPA. Those are still in the hands of the Office of Management and Budget. That could happen at any day. We do not have that. We do not have the small refinery exemption announcements yet. That too could happen any day for 2024. The backlog of other previous year's requests will be handled at a later date. So we're still waiting for that. And the 45Z requirements that are the funding mechanism for the biofuel program are still in the Senate. No real clarity what the Senate's going to do with them there. They're still targeting moving that bill through the Senate by the 4th of July Independence Day holiday. Don't know if that's going to be possible to do or not, but that's the objective. And until that happens, we probably won't know much about the funding mechanism. So with that, we're generally mixed in the grain and oil seeds this morning, with grain prices modestly higher, with a little bit of weakness in soybeans, a little bit of pullback. They started the day with all three higher. We're basically drifting. Growing conditions for these corn and soybean crops right now are nearly ideal. We did see the longer range models a little bit drier again and hotter overnight, but overall the bias is toward less risk for the growing season. So it's going to be tough, I think, to sustain a rally in these markets until unless we see weather risk pull forward into the 2-week pattern, and or we get a major trade agreement with China, which I think would take some time. Energy prices, though, on that China optimism, pushing to new 2-month highs this morning. And so we're seeing some more firming there. That will show up in the June CPI numbers when they're reported in July, which could be another factor for the July markets. So this is Arlan Suderman again coming with you from the trading floor, and I'll continue to come to you as news develops that's going to impact the commodity markets. Be sure to like and subscribe if you want to continue to get these updates from the trading floor. Thank you.